Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 5th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media, where I've talked about the economic and geopolitical environments and how that impacts the overall markets. Well, I do that in these daily market commentaries, but I layer on top of it the option strategies that I find to trade in these types of environments. What is the best strategy to implement given certain circumstances, the right strike location, days to expiration for that directional assumption, whether it's bullish or bearish. So check those out on my webinars. I go into it a little bit into detail on these daily market commentaries, but those webinars are really where you get the nitty gritty. So check those out as well. All right, let's talk about the economic data and the geopolitical environment that we've got going on. Well, economic data, we have not a whole lot of economic data other than here in the United States. We did get non-farm productivity coming in at 1.2%, which was better than the expected 1.4%. Labor costs coming in a little bit light for what I'd like to see. I'd like to see some more wage inflation with this demand for employees, because when you're at full employment or very near to that, it means that companies have to hire away from another company, and that means they usually are going to have to pay more or have some ancillary benefits that will draw that employee, that valuable employee. So it came in at 0.9%, expected to be 1.5%, so not a great look there. Unemployment claims coming in at 216,000, in line with expectations. A real wet blanket factory orders coming in at 0.5%. That was expected to be, negative 0.5%. That was supposed to be a negative 0.2%. Now, keep in mind, this is going to start to add in the coronavirus or some of those slowdowns that we've seen from coronavirus. We're going to start seeing that show up in some of these economic data points. Not a lot. We're going to have to still wait maybe a little bit further down the road, but March is going to be where the rubber meets the road on some of these economic data points to see if it's how much it's affecting the overall economy. Okay, so we're starting to see a little bit of that show up. We've got natural gas storages coming in at a drawdown of 109 billion cubic feet, which was slightly less than the expected 112 billion cubic feet drawdown. We also have Fed governors from here in the United States, Kaplan, Kashikari, and Williams speaking, and also some Bank of England, Bank of Canada. It's like every member of the financial or economic drivers of these major companies is speaking, and mostly about coronavirus and how they are going to tackle that. All right, we've got crude oil up just slightly on the day. I'd say by about 22 cents. Something to note here, OPEC, remember I've talked about this. We get below 50, we're going to start seeing OPEC start to chatter. OPEC they are talking about slowing down production. They're trying to get Russia on board as well to try and limit the supply going out there to try and drive these prices back up. OPEC only thinks about themselves. It's not when you start seeing these slowdowns, they should kind of let this stuff flow and create that velocity of money so that we can all travel and use their gasoline and use their products in manufacturing sectors. Fracking operations are going to automatically start slowing down on production because it is at a level where they can't really make money. They won't shut these operations completely down. They're just going to go to minimal operation capabilities, and because it's a lot cheaper to keep it running for the short term than to shut them down and start them back up. All right, so crude oil trying to get some leg up here. We've got the gold futures moving higher again today. It looked like we were getting a little toppy yesterday, but we also had a medical person out of California that works at the airport at LAX, and that person contracted coronavirus. Also, two other people, I'm not really sure where they came from, but they contracted coronavirus, and they hadn't been traveling anywhere and had supposedly no contact with anybody that had coronavirus. So that has caught some people off guard and caused a little bit of alarms. I've told you guys, it is a very contractable disease. It is going to probably make people sick, but the people that are dying are elderly. Another person died and they were elderly and had health issues. So those are going to be the people that really be affected. The other thing to note is a lot of these companies are going to pull back on sending their employees to different locations in order to have meetings and stuff like that. I think that there is going to be more of a online type presence at these meetings so that people can stay at home, not travel, and be exposed to that. So there are opportunities out there. Some of these companies that provide those type of services are going to do well. I think that staples are going to do well. Also, the banking stocks might hurt a little bit, especially with lower interest rates. And travel and entertainment is going to be a little bit painful, as we know with my Delta Airlines trade. So gold moving higher as a flight to safety. We've got bonds moving higher here by about a half a point on the day, looking to settle at all-time record lows. So we've talked about this. Housing market, that is also going to be something that is a real driver, as people are going to use this as a safe haven for the stock market. So making that asset something that people are going to put in a overall portfolio. And that was the 10-year. And this is the bonds. Bonds up over a point on the day and also looking to settle at record lows. Keep in mind that 10-year right now trading there, it's probably at 0.92%, just staring negative rates in the eye. Really, I mean, it's around the corner. It quite possibly could happen. All right. Dow Jones Industrial Average off only about 500 points. I say only because it was off by about 800 points or more earlier. The new 100-point move in the Dow is actually 1,000. So keep that in mind. We've had 1,000 points days. In the last 3 days, we've had 2,000-point moves, over 1,000-point moves, and some of the biggest moves Dow Jones has seen ever. So volatility is here for a little while now. All right, we've got NASDAQ off by about 46, but you can see here again, if I pull this up and look at the low, we can see the low coming into today. The low today was 86.72, which is another 75 points lower than this. So the NASDAQ was off well over 100 points earlier this morning. E-mini S&Ps trying to make a comeback here as well, taking back half of the day's losses. You can see it's down 40 on the day. The low is 30.31, so another 40 plus ticks below that. So we were down almost 80 points in the E-mini S&Ps. So let's take a look at the daily chart of the E-mini S&Ps. You can see overnight after the close, that's when that news started breaking about the, I'm not sure if it was a TSA, but I think it was a medical examiner at the airport contracted coronavirus, and that caused the overall weakness in the markets, as you can see. Coming into the day session, I think the markets are starting to realize, hey, you know what? This corona thing is here to stay. The market's really sold off quite a bit. There's a lot of value out there at this point. People are probably going to stay away from cruises, flights, maybe Disney World, although they were showing at Disneyland, they've hired extra people to literally wipe down all of the infrastructure with these, probably bleach pads or something like that. Every time somebody touches it, they're cleaning it off. So making sure that we aren't trying to facilitate any type of coronavirus spread. So wash your hands, make sure you're not touching your face and all of that stuff they're saying, but make sure you wash your hands. And if you're feeling sick, stay at home, as bottom line, as would be with any other flu, right? All right, so that being said, that's all I've got going on right now. I was looking at dumping my Delta and my Disney, but at this point, I don't think that I'm going to roll out of that. I think that maybe we'll get another bounce here, but I'm getting a little weary of the travel stocks right now. But, you know, things like my Facebook, I'm good with. Gilead Science, I'm very close to covering that, but that's one of my few that are really working out nicely right now. Gold, I don't know about that one, but basically Coca-Cola, Microsoft, Starbucks, I think those are going to do okay going forward, because especially if people are starting to travel for the holiday season, Starbucks is going to still see some influx. Maybe people are going to be driving. We'll have to see how that all goes. But overall, was very happy yesterday. Today, a little bit leery as we're starting to see some of this panic really start to set back in. I'm getting a little concerned about some of my travel and entertainment sector of my portfolio. That's about it. Today's webinar is going to be a great one. It is going to be on the collar. The collar is what Mark Cuban made famous. So we'll talk about how we set that type of strategy up around underlyings we have in our portfolio. And we will be able to limit our risk to the downside while capitalizing to the upside. So check that out. Go to protraderstrategies.com. That's all I got for you. Other than we got to go over this little disclaimer right here. Please pause the video and read over this. We are an educational company. We are not trying to give you guys investment advice in these webinars and or daily market commentaries. I'm just trying to teach you guys how to trade options, and it's up to you on how you implement that into your portfolio. All right, so if you can't take that, take it easy.